All right, cool. Let's jump into it. So 10:25 on Friday. What are we, the 17th? So ticking into the second half of the month here. Just going to start off with gold because that was definitely the trade overnight. Played out beautifully actually. So if you watched yesterday's sort of daily take on it, we sort of drew up these little sort of support resistance, this little box that I was sort of saying. I think this was yesterday's open. Start off here, so a little bit of a flare up, came back down, and then obviously bang, exploded up. And certainly this main move through here was just off the back of some US data, sort of later in the day. But certainly, look, I was thinking like even if you watch the video, I was like, oh look, we could put the support here because technically, look, support have been here, and look, both kind of work. You could have put it here and said, as it came down here, look, unable to close to the underside, unable to close to the underside, rejection back up the other way. But I went for the lower one, which is a little bit more of a cautious sort of area, which is down in these sort of wicks to sort of see if you could get the close down under here. And if you couldn't close under here, you obviously didn't close under here. And we saw the reaction. It was pretty much one-way traffic sort of coming up here. Structurally, it worked very well as well, like because as I said, I put that little alert above here. First push sort of just fell short of that sort of 1970s sort of first sort of target that we were looking at. But certainly as it came back and reloaded, and this is what I say with gold, I mean, this structurally, here's your break, your retest, and then once it goes past that high of the breakout, well, look at the move afterwards. You're going from 68 up to, was about 88, wasn't it? 88. Yeah, it's a 20 buck move, just direct one-way traffic going up like that. So, I mean, that's the thing. If you've got the patience to wait for these things, and the goal to sort of go, okay, here's the break, come back. You can't move your stop to even too early because that's the thing. A lot of people get sucked in. They sort of go, okay, here's the breakout. Oh, I'm into profit. Put my stop to even. Comes back, well, stops them out, and then makes the move. These things never run in one move generally. If you look at all these sort of breakouts and that, I mean, look, sort of drops down here, fakes them out, bang. Drops down, fakes them out, bang. You got to be prepared to sort of like, still maintain a little bit of risk in the trade and not be too quick to move the sort of stops up. But yeah, certainly the explosion was very nice. I just put these lines on here just now. So generally sort of as I'm looking at these charts, it's my first look at them or first take of them in the morning. Like obviously I'm always have my eye on them, but as I actually sort of go through and record these things, I'm just sort of like, updating, drawing them as I sort of see it. I did just put this one on just before his because it's, to me, like, I think we had it sort of something like this yesterday, I think it was, something along these lines, maybe something like that. And I said, look, I'm not particularly keen on this one just because like it sort of cut off the bottom here. I don't mind if it cuts it off, as you can see up the top over here. But for me, this wasn't a really good thing. But as I said, it gave us a sort of little bit of a sort of potential area had it broken this zone to get that little explosion. Because as I've said, like I was still looking gold longs. I wasn't looking to short it. I was only looking for the buys. And anyway, that's certainly how it played out very well. But yeah, so as I'm looking at this now, to me, this is a fairly decent structural sort of channel that seems to be forming. If you zoom out a little bit, we're up back into this, we're testing, sort of poking our nose into. I'd like to see a sort of, as I've said a couple of times, I don't expect a lot of movement in Asia session for gold. 5 buck ranges seem to be about the sort of most they move. Occasionally, of course, we get some fast moves, but more often than not, it's a pretty sort of subdued sort of price action through Asia with gold. But we are poking ourselves back up into this upper range, and this is where we want to be. We want to be sort of dancing around here. We want to find a new sort of support at that 1980. Like if I go back out again, like we know how important 1980 is. As you can see, support, 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 resistance, resistance, resistance. Like it's a crucial swing point for it. And if we look at this whole big move coming back up here, coming back down, you can see how the plan was to come down, slingshot back up. And it's very much coming back almost a V-shape recovery. So you can get this one out of here for now. So yeah, certainly if we can get back up and hold above, if we can take out yesterday's wick, which is the 88, we're at 81 now, that's going to bode very well for a continued move. We've got the RSI's cooled right off and it's flipping, coming out of, this is where you want the RSI to be, the stosh. Like it's coming out of overbought, oversold, it's crossed over nicely. You've got a nice big bullish candle sort of coming with it. Like, of course, like we've seen, anything can happen, particularly at the moment. But, the plan has been basically that sort of like, once US dollar does cool a bit, that money has to flow somewhere. And gold is the typical inverse relationship with DXY. It has been sort of running in sync, or well, not so much running in sync, but sort of like as gold's running, DXY wasn't falling. It wasn't really gaining, but like we've seen in the last couple of weeks with the Middle East situation, that's what skewed things a little bit. And gold doesn't always, 100% of the time, run with risk on, doesn't always run with risk off. Most of the time, it'll run inverse to US dollar, so a little bit more risk on kind of thing. But certainly during that sort of risk off period, while everyone was a little bit sort of heightened about Middle East and all this sort of talk about World War III and blah blah blah, blah all this kind of junk, obviously that's what got gold running. A lot of the market was scared, so risk off. And so it was obviously running with a risk off kind of attitude, which is obviously why US dollar sort of held up a little bit longer as well, because obviously it had a little bit, a couple of sort of fake breakdowns. But anyway, back to this. Certainly, if we can hold into the end of the week above the 80s, this is where we want to be bouncing around. So if we can sort of hold and have a positive sort of close to the end of the week, as I said, look, this is a bit of a channel coming up here. It gives us a nice line to sort of say, look, if it does sort of break down, we can start to look for sort of, some lower swing sort of positions, maybe sort of coming back through the sort of 1970 if we did sort of get a break through this area here for another sort of shot back up here. But certainly at the moment, it was a very nice structural move overnight, and certainly a nice sort of follow through. As I said, you see the sort of moves. It was a $20 move in US session, and Asia is generally like these little small candles here doing absolutely nothing. But it's set up beautifully and played out well. Cool. All right, and flip across to Aussie. Aussie is holding in there. It's holding in there. So if we get onto the 4 hour, oh, this is on the 4 hour. Bear with us one sec. Okay, so seeing the 4 hour sort of trying to sort of shore up some support around this zone here. So we can see that sort of, this was 4 attempts it's had to sort of try and come down into the zone here. And particularly on a structural sort of thing. I'll clean a bit of this stuff up. So on a structural sort of basis, you've got sellers coming in. We found support. Buyers push it back up. This sellers come back in, and this gives us a lower high than this previous high here. So now we've got a lower high, which is the first signal for a change of trend. What you have now are the sort of the outcomes that we look for. So you've either got a sort of push back down, which it obviously did. You have the sellers push it past where the previous buyers were holding it up, which was support zone here. And if this scenario plays out, then price sort of finds support again, comes up, generally a back test about that level, and on you go, whether it's at the same level or continuation. And that's when you get your downtrend channel. So the first indicator you're looking for a change of these sort of trends is the lower high, which is what we got here. So these highs, second highs, lower, bang, coming down. This line's drawn a little bit different because it was drawn on a 1 hour, but I'll get to that in a sec. So that is what you sort of look for. The other outcome is what we've sort of got happening at the moment, where we're seeing buyers are happy to sort of come back in at that same level. And it's pushed up, although it didn't push up quite as strong as the sort of previous 4 hour pushes, it's sort of come back down. And you can see here, 4 hour again, 4 hour again. These are getting very tight down the bottom here, and buyers are holding. This means that basically people are sort of coming in saying, yeah, I'll buy it here. Give me another shot to buy it. I'll take more here. I'll take more here. I'll take more here. So, as long as the buyers can keep sort of saying, hey, look, whatever you sort of give to me at this price, this sort of 64.60, 70, 64.60, but 64.60 I think is a fair sort of line to call with it. Anything you throw at me and put available on the market at that price, I'm going to take it. I'm going to take it, bang, 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 bang. And eventually what will happen is, well, obviously not what will happen. There's a couple of different scenarios here, but the potential is that, eventually the sellers are depleted. Nobody wants to sell at this level anymore. They sort of see that everything's being bought here and they think, well, I don't want to sell it at this level anymore. This is too cheap. Maybe I'll just sell it for, 64.80. This is all hypothetical and just, using sort of numbers as an example, of course. Say I want to sort of sell it at 64.80. Well, people that think that Aussie's going above 65 and moving on to sort of 66, they're going to go, well, if there's nothing available here, I'll buy it here. I'm happy to pay a little bit more. Look, it's going up here anyway. So what difference does it make if I just push up a little bit more? And that's what's going to give us this sort of outcome where there's nothing for sale here. It's only for sale here, and price buyers will move over and you'll see this pushing up again. And this is the to and fro of the market. It's just going to be back and forth, back and forth, back and forth. What we are looking potentially at now is if this scenario does play out, you're going to have the same sort of situation, but in reverse up the top side here. People are happy to sell it here, happy to sell it here. You can see these guys are happy to sell it at 65.20. They were happy to sell it. They're like, oh, look, I want out no matter what. Even though we had that sort of good, strong Aussie data yesterday, that didn't matter to them. They were like, oh, sweet. Well, you know what? I'm still going to sell it. I don't care. I could get 65.20 yesterday. I'll take 65.10 today. And that's what gave us our lower high. So what we want to do is we want to see whoever or whatever part of the market was pushing this down, we want to see that they're depleted. And we want to see that, okay, bang, these guys are happy to push it. There's nobody happy to sell it here. We know that there's sellers over here because we've seen it the last couple of days. You can see it, it's on the chart. They sold it here, they sold it here, they sold it here. So we know that the sellers are sitting in this zone along here. So what we want to do is get rid of the section of the market, the sellers that were sort of pushing it down here. We want to come up, we want to see how many more people are happy to sell it at this zone here. At this zone here, sorry, that's the bottom there. But we want to see how many sort of more people in the zone want to sell it here, in the market, sorry, want to sell it here. Well, ideally, for a bull case scenario, is you want to see that depleted. And once that's depleted, people go, well, look, it's going to 66, it's going to 67, month, 2 months, whatever. Again, just examples. I'm happy to pay 65.40. I'm happy to pay 65.50, so on and so on. And that's how we're going to get our breakout. It's all just a to and fro of where the buyers are, where the sellers are, and that's what the chart's telling us. We want to see a change of pattern. So for a bull case scenario at the moment, you definitely want to sort of make sure that we don't deplete the people or the section of the market that are happy to buy it at this level. We don't want to sort of see that sort of people are happy, sort of wanting to get out so much that they'll sell it cheaper and cheaper and cheaper, because obviously that'll sort of create a break of this area here. And then, we'll be coming down and we'll look for wherever that next support zone may be. As I said, there's a good chance around the sort of 64.40 zone that we could see another sort of bounce, and the whole process goes through again. It's all about just sort of going down till we find that support, we find a level in which the market is full of buyers, and that number supersedes, obviously, the people trying to sell it, and then further and further. So at the moment, the fact that it's sort of like these candles are tightening up, you can read a little bit into this, but it's the end of US session, start of Asia. So these are always going to be a little bit smaller. So smaller is obviously sort of a little bit less volume involved in the market. But as things spin, you want to see them come a little bit shorter like this typically. So as it's a nice big fat candle, short body, and then bang, we got a spin. So certainly if we can get above 64.80, I wouldn't really count so much of this candle here. I mean, we've still got till 1 o'clock local time on this one. But above 64.80, I think could be a good chance to sort of see how those sellers are sitting at 65. So we're going to go. Look at the sellers at 65. But for now, the fact that it tried to push down a second time and didn't hold, didn't break through, I think this bodes well for at least a little bit of a sort of push up to sort of test and see how the sellers are all looking. Another sort of scenario, obviously, if we don't get the break here, would be that this comes up here, we find the sellers again, which we most likely definitely will, and we just push back down. And this is what gives you these kind of things, where it becomes a range. And when it becomes a range, it's really just a tussle. between the sort of the buyers and the sellers to see who's going to break first. If we flip back actually quickly onto the gold, this is exactly the scenario that we were looking at with gold. You've got the section of the market happy to buy it, section of the market happy to sell it, section of the market happy to buy it, section of the market happy to sell it. Oh no, wait, they've disappeared. Resistance now becomes support, and then it moves on. And it's the same on every so just trying to find the right chart. It's the same on every time frame. It doesn't matter sort of what you're looking at. Structurally, if you're trading horizontals, this is how you're doing it. They use the sort of channels to sort of see how the direction's moving down and all this kind of stuff, but more or less, that's what you're looking for. You're looking for where the buyers are valuing the market and where the sellers are obviously sort of valuing the market. These levels won't always hold. As you can see, this was support, this here. Buyers weren't here, push back down. Found support, push back up. So, it can be just in this section of the market, sort of point in time, basically, the market values it at certain levels. Different, it could be as much as an hour or 2 hours later, or it could be a day or a week later. And this is why you need to keep updating the charts. So, basically, okay, where are the people that are moving the market currently pushing this? So certainly still looking for a little bit more upside. I think above sort of 64.80, what do we put, 64.83 here, gets us over that sort of 4-hour candle. I think that'll be a good sort of little indicator so to come back up and test those highs over 65. It's been over 65 a couple of times, so this is a really big area. I mean, it's the round numbers are always going to be a little bit tough. But certainly this, because we know it's a major breakout and it's like a 3-month high major breakout. But if you look above, so this line here is 65. This is 1 time, went under, 2 times, went under, 3 times, went under, 4 times, went under, 5 times, went under, 6 times. So that's six attempts over 65. So certainly a big sort of like push and break and hold above these, higher time frame, the better, is going to bode very well. And I think that's really going to spark up a lot of the market. Overall, the market seems to be moving into a very much a risk on attitude recently. Aussie has yet to super benefit from that. If you look at a couple of the other sort of more sort of risk on pairs like the euro or the equity markets, they've all been running. Aussie obviously has had a push off the lows, but sort of comparatively to the other ones, not so much. So at the moment, so we've dragged this one up, so he's in line with that last move, and he's holding around the 38%. He's got this little support here. We just want to see that drive back up here and look for at least minimum this little range, and then we can sort of work out who's going to win, the buyers or the sellers, and that'll give us our next direction. Okay, and let's flip across DXY, which is, of course, is the other one that we've sort of been looking for. So we can see that this level here has held quite strong with the sellers. So if we drag this one back out, let's jump onto at least a 4-hour, we can see that it was the bottom of this previous zone. That's why we've got it marked out, and certainly they're having a tough time breaking through this. They did have some data in last night, so let me get a couple of these out. They did have a bit of a data out last night. Actually, they had a few bits and pieces out. Unemployment claims, I think, was the main sort of one, which sort of ticked up a little bit higher. What do we have? The sort of Philly Fed manufacturing was still negative, but not as bad as expected. Nothing else that I could really sort of see, but it drove back up. Like, 'cause this is the perfect scenario. We got sellers coming down, we got the support. So let's draw this one out because this is what's important for us now. This zone through here. So again, close under here. You just want to see what has the market done that it hasn't done before, because you can see here sellers came down. Get this one out of the way. Sellers came down, push it back up. Sellers came down, push it back up. Sellers came down, push it back up. Every time it's touched this line, even last night, you can see the reaction, and it's bang, it's pushed back up. So these are the two. This is the sort of battle lines that we've got in the short term between this sort of 104.52 and 104. We'll call it 104 even. We get a close under 104 here, then that's going to sort of click on for that next leg down. But certainly at the moment, Get rid of these ones as well, probably, because respecting it a little bit, but not so much. Certainly at the moment, the market's still not quite giving up on the US dollar. You got to remember, it's still only at the 38%. So it's still in a position where it could be considered healthy pullback for the whole sort of scheme of the move. But certainly, I think sort of, even despite having sort of, stronger US data and these kind of things that are more akin to rate rises, I think the market has spoken and said that, look, Fed, they believe Fed's done with this turn of the cycle. And also the fact that the CPI came down, beat expectation, the way I consider it, that's a second tier bit of news. Only bit of news being first tier is the actual rate decision. So, second tier bit of news being like, NFP, CPI, these kind of things. I think they're the ones that they're really looking hard at, which are generally the ones that really move the market, anything similar to the actual rate decision itself. When you get the other sort of bits of data coming in, like the sort of PPIs, as I said, the Philly Fed manufacturing, unemployment claims, even though that had quite a strong sort of reaction. Those things I sort of don't believe are enough to overcome the fact that the CPI is still dropping and beat expectation. I think that holds more. This is just my personal view. I think that holds more weight than than sort of these other little bits of data, which are more akin to potentially sort of seeing rate hikes. They'll have quick reactions, as obviously you see, but the thing that's important with these is, are they sustained reactions? And are they knee-jerk reactions? It's sort of like when somebody, when you see all these sort of Fed people talking, and it's sort of like the market will just go and shoot off, and then it'll just trickle back down. But nothing actual physically has changed. It's all just speculation. And of course, the same thing, CPI and retail sales and GDPs and all these kind of things are all technically kind of the same, but they hold more weight. And that's why I sort of call the CPI the sort of second tier, and these other bits and pieces that are driving it back up, or at least preventing it from completely melting down. It's like, well, look, there is some hope, and that's why it's pushing back up, but it's not as big as, this was CPI. Bang. Here's your support, resistance, back down, looking for a break here. Anyway, long story short, we want to see a break underneath this zone here. So underneath 104, we're going to say, look, next leg down. Look, this could obviously, as we said, structurally, if we look at this, it could be in a bit of a channel here. So this is why we've got these other sort of little possible rejection zones. If it does decide to sort of kick off and does go up on top here, because again, look, there's no guarantee that we'll get the next leg down here now. As I had it drawn before, you could still come back up here, retest the bottom sides of this, come across here, test the top side of this channel. There's a couple of things that are playing out, which could say that, look, it's got a little bit of more upside before it comes back down. But I don't think these bits of news are enough to sort of completely shift the whole market and go, okay, look, the manufacturing or the PPI numbers and that were up a little bit, so hey, let's all just buy the US dollar again. I just don't think those bits of news hold that kind of weight. Anyway, that's a little breakout boxes for me. I still am looking for further downside with US dollar, but of course, if these alerts get kicked, then I'm going to be holding off on anything Aussie and gold a little bit more, just till we sort of see a little bit more of resistance at the next level. Then I'll be looking to attack them again. All right, copper got its breakout over this big sort of daily falling resistance that we've been looking at on the daily. So we've done this before, as you see over here, back in July, and this shot right out and then bang, smack straight back on the nose. So similar-ish here. However, this one, the difference between the two, apart from the obvious sort of size of the sort of breaks, is that this one obviously was taking out this horizontal here as well. So this could have just been a bunch of stops that got hit, as well as sort of this falling resistance. The falling resistance, probably, I don't think so many people are probably putting their stops above that. I think certainly above these highs, most likely probably these highs here. is sort of what triggered this to sort of get out the top over here. And you see this is a bearish engulfing, and obviously you can see the reaction after. This one here, obviously we've just got these sort of lower, more previous sort of highs here where we had that alert set up, and obviously bang, it's gone up here and it's sold back down. This one at least has managed to close on the outside of the line. It's not engulfing that sort of bullish candle prior to it all. So, there's obviously a couple of people that are still saying, no, look, we want to sell it. We're still getting technical higher lows till this point here now. And this is on the daily. We've technically put in a higher high. We'll put in a higher low. Not enough that I'd sort of be able to or be happy to sort of draw out any sort of channel. Although maybe something like that could be a channel. I'm not super keen on that one actually. I'm going to take that off. Look, that would obviously give us a sort of target if it does break down a little bit further where we may be looking if it does decide to come back underneath this daily sort of falling resistance. But we've got the RSI sort of supporting it. We got general sort of overall market risk on kind of attitude towards things. We got China and Xi and Biden sort of kissing and making up. What a ridiculous sort of event that was. Biden sort of does he have zero idea how to sort of act with these people? So like you're trying to sort of, mend ties with people that are, sort of typically sort of quite irrational anyway, and then sort of like you have a good meeting and then sort of afterwards, yeah, he's still a dictator. Like, it's just not going to go down well, is it? But anyway, that's about par for the course of what you expect from that Biden dude anyway. But regardless, anyway, sort of, you've got sort of those guys sort of, and this is what I've been saying for the last couple of weeks. In the background, there's been a lot of little bits of China news where they've been trying to sort of mend ties with other countries and all these kind of things because they know they're stuffed. There was a whole bunch of data came out yesterday for them where, the housing market is still in its sort of fast decline. I think that's not a shock so much anymore. I think everybody knows that they're stuffed on that. And this is why I believe that they're going to, try and sort of ramp up sort of their manufacturing side, which is good for copper, obviously. They're trying to sort of mend ties. We had Albanese over there. You've got Biden over there. They're trying to sort of get sort of invest. They're trying to repair relationships to entice investment from other countries. They want money flowing back in because the whole sort of attitude of like, hey, we're China, we're so good, we can do it all ourselves. Well, you tried it, you failed. No, that's what it is. So anyway, long story short is if as long as these people are sort of working together, particularly sort of Biden and Xi, and sort of saying like there was even talks of them sharing sort of military things, which is over the last couple of years unheard of. But the point is, it's risk on, and that's what's important. The world doesn't want uncertainty. They don't want people, they're about to, kick off. You see how the market didn't react typically like this, but gold certainly did. As soon as people are sort of going, oh, look, World War III, blah, 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 this kind of stuff. Well, it didn't happen, thankfully. But, people love when people are getting along. Markets love, more importantly, markets love when people are getting along. So I think as long as they continue to sort of work together and there's no unhinged bits, I still think we got a bit more upside and recovery in copper off these lows. So yeah, just want to say structurally sort of, continue to make the new higher highs. 380 is the line that I'm looking to get above. And I think sort of once we get here, I think we're going to start to sort of really, sort of pick up some notice once we start to take out some of these previous highs. I think that's when the market's really going to start to click onto it. And finally, across to China. And so China's slowly grinding down. Yes, what a grind this has been. But look, we got the break. You can see that last effort here. This just worked structurally very well, didn't it? Bounced off here, came back up, resistance where we wanted it. And this is the same thing I was talking about with the other ones. You've come down, you got support. You've gone up, you got resistance. You're going to test that previous level for the support. It wasn't there. Bang, we go through. It breaks through, finds support, checks for resistance at that previous level that we had marked out. Yep, okay, so it was support, now it's resistance, and bang, we go for the continuation. So again, with these ones where we've got the alert set up here, want to see this take out the bottom side here, and I think that'll be good enough to sort of confirm that we're definitely done with this upper range over here. Obviously, sort of like, things will come down and bounce, as you can see. I'm looking, down the track, sort of moving into sort of like, what's this, sort of through till March or so next year, a potential sort of head and shoulders. Like, I think this could very much be on the cards. Seems we look for the time being to be sort of done with this top level here. If we can push down here, and certainly if we can really sort of melt down into the end of the year towards that sort of like 712, 713 zone, this will be a very strong support here, because as you can see, the pullback here was quite strong. Also, I think this worked out to its measured move, depending which one we take. No, I don't remember where we put this one. Maybe this one became obsolete after a while. But certainly, yeah, the move down is sort of finally sort of playing out. This has been a 3-month range. We just want to keep taking out those bottom wicks. If we can get down underneath here, that'll be a nice sort of confirmation of further downside with the Yuan and that in the short term. All right, that's about it from me.